Hi everyone and welcome to the tutorial on how to use the restaurant business plan. So in this video, I will quickly go through how the model has been built and how it can be used. So at the start of the model, you will find a tab called color coding, which will give you an overview about how to interpret the different color codes that you can see in each cell. The most important thing is that you can modify the cells color coded as yellow with blue font and dotted border, as those are the inputs that you can modify in order to tailor-made the business model to your specific needs. Then the second tab refers to a table of content. As you can see, it gives an overview of all the tabs that you can see at the bottom here and how to interpret it and what type of data you can find within each tab. So for example, we have the input tab, which hosts the model's inputs, and you can make adjustments here to fine tune the model. Then you can find dashboards with either only numbers, only charts, or both. You can find the financial statements with the 3 pro forma financial statements, income statement, balance sheet, and cash flow statement. You can find a tab referring to evaluation that is given by the discounted cash flow model. Basically, we project the free cash flows from your business, we bring them at present value, and this gives you an overview, an estimate of the value of your company. And then we have tabs referring to the calculations, so where we do the actual calculations of the model. So we have the revenue tab, where we forecast revenues, the COGS, where we forecast the costs of goods sold, the expenses, hiring plan, the waiters, the cooks, and so on. CapEx, capital expenditure, so the amount of money that you invest in your business, basically either to buy the kitchen equipment, for example, or some particular machinery, and so on. And then the debt, in case you incur in any debt. So let's start with the input. As you can see, the inputs are structured in different sections, and by clicking the plus button here, you can open a certain section. Then let's make it bigger. So starting with general information, you can tailor-made your company name, so the name of your restaurant, the financial plan start date, the fiscal year end, the restaurant opening. In this case, we have restaurant name because this directly refers to here. So let's say Cool Restaurant is the name of your restaurant. So as you can see, this gets updated automatically. And let's say that you open in April, and the currency that you want to use is dollar. Once this is done, you can close it or leave it open as you prefer. And then company specific information. Here you can input the cash starting balance, so how much money you start with, the corporate tax rates, and how we should call the unit. Is it called sheets because you have seats basically where people can come in and eat inside? Is it just people? Should we call it people because you just do takeaway orders and so on? You can modify it, and the model will adjust accordingly. Then quantity of seats in this case, because we have specified seats. So here we have divided the business plan into 3 main revenue streams, let's say, depending on the time of day where they occur. So breakfast, lunch, and dinner. And we give you the possibility to differentiate between how many seats are available at each time of the day. So let's assume, for example, that for breakfast, you just open the terrace and not the tables inside. And so you have less seats available. You can modify it here. As you can see, 2029 is in red. And the reason for that is that we forecast the model for 60 months in the future. And so, for example, if we start on the 1st of January of a given year, then this shouldn't be an issue, right? Because 60 months are included in 5 years. However, if we start, for example, I don't know, in May, then we will need 5 months of 2029. And as you can see, the color codes changes, and then so you can check the color code tab, see not applicable, cells color coded is not applicable, can be ignored, and are not considered by the model due to user set inputs. So if those are red, you cannot touch it. If they become yellow, then you can work on them. Seasonality, then once the total available seats have been taken care of, then we can think about seasonality. So you can think about how many days you are open per month, and then the average occupancy rate. So out of all the seats that are available, what is the percentage that is taken, right? So let's say that it differs from breakfast to lunch to dinner. You can modify it here, and based on month as well. So let's say that in January, you occupy 35% of the 35 available. Always in January, in lunch, 40% of the 120 available, and in dinner, a little bit more, half of it. You can modify them, just changing them here, and the results will change accordingly. And then restaurants can have an additional revenue streams, not only dependent on the amount of seats, they can also do delivery orders with delivery apps. That can be Uber Eats, that can be Glovo, Just Eat, whatever. And so you can modify it here. So share of seats taken, so the amount of orders that you do we have codified two main options for you. So either share of seats taken. So out of the seats taken, for example, for breakfast, you have 35% of 35, or for lunch 40 of 120. How many orders you additionally to those sell as a percentage of that number. So here I've just inputted 5%, but if you say, no, I will have as many clients, as many delivery clients as the amount of clients that come actually in my restaurant and eat there, then you can just set 100% in that case. And then you can set the start date. Let's assume that first you start only by doing inside customers, and then in September you start with delivery. Another option is using fixed value. So if you don't want to use the share of revenue, you can use fixed value. And in that case, you can set the amount of orders, an estimate for the first year, and then how much they grow per month. So you say, okay, the first year that I operate, January, I get an average of 30 daily orders for breakfast, 50 for lunch, and 100 for dinner. And every year, so starting from January of the next year, those numbers will grow by 5.5%. So those are the two options. Then once the quantity has been taken care of, let's close all of those here, we have the revenues. So revenues is basically pricing, right? We have taken care of quantity. Now let's take care of pricing. So you can adjust the average price that a customer will pay you based on breakfast, lunch, or dinner, and how much this amount grows every year. Then of course we have expenses. We will have different types of expenses. We will have the average cost per order, so the ingredients, for example, the average amount per order for breakfast, lunch, and dinner, and how much it grows per year. Then we have recurring expenses, which can be marketing, can be bookkeeping, kitchen rental, restaurant rental, cleaning team, a software for management system, utilities, and miscellaneous, whatever. You can actually modify and add or delete. And then we have a category. So here you can set the categories that you want, and then those categories will appear as a drop down here. So for example, if we do category XYZ, then the category XYZ will appear as a category here. And then you can set the expense date, so when it starts. So for example, in this case, marketing starts January 2024, cleaning team August 2024, utilities September 2025, and so on. And then again, the calculation type. So how should we calculate it? Should it be a percentage of the revenues? And in that case, the model asks you, okay, then give me the share. Should it be a fixed amount? And in that case, we can select fixed amount. You select a fixed monthly amount and how much it should grow per year. Should you and of course you can change it. The model will tell you, okay, then I will ignore, because we remember from color coding that those cells are not considered by the model. So the model is saying, okay, I will ignore this, but you need to take care of this one here, which is share of revenues, and so on. Of course, you can delete as many as you want, add up to how many we have here, which are 15. Then we have the costs associated with the delivery apps, because of course they will charge you money, and this can be calculated as a share of revenues. So you can select the expense date, when the expense date should start, the category in which it should fall into, and again, the categories available here are taken directly from here. And then you select how much actually it will cost you. So how much the either Glovo, Uber Eats, Just Eat, or whatever, how much they will charge you out of the order amount. And then we have one-time expenses that can be creating a website, initial setup cost, restaurant renovation, whatever. It can be initial or purchase of dishes, plates, and then all those stuff like tables, new tables, chairs, and so on. You can add those here. You can select that category. Again, the expense date, when it will happen. This is not recurring one time, so when it will happen, and then the amount. Perfect. And let's close this category. And let's go with hiring plan. Here, again, you can select your departments. So which departments up to 5 work in your restaurant, for example, management, operations, admin, or kitchen. And then you select the roles. So you can hire a chef, for example, and put it into department kitchen, assistant chef, kitchen helper, waiter, admin assistant, and add or remove as many as you want. Their salary, start date and end date. So when they start and when they finish, if they finish, otherwise you can just leave it empty. Then employment taxation and how much their salary should increase per year. And we can close it. Then capital expenditure, which can be kitchen machinery, utensils, furniture, and so on. How much, when, and the depreciation schedule. So in how many years the value of whatever you have bought here goes to zero, right? So for example, if the machineries that you bought after 10 years need to be repurchased with new ones, then you can set 10 years, and in this case 50,000 that you pay, we will calculate 5,000 per year for 10 years in your model, which is how depreciation and amortization works. And then finally, balance sheet. So inventories, they can be set as a share of revenues, accounts receivable as well, accounts payables as well. In this case, very low receivables because most of the times clients pay right after finishing dinner, breakfast, or lunch. Inventory is quite high, cannot be too high because of course food goes bad and so it needs to be finished. And then accounts payable, meaning how much you still owe to your suppliers. And then if you have any investor, you can set how much and when. So basically when they invest into your company. And then the debt, in case you issue any debt, you can select the name of the debt that you want to give as a reference, the borrowed amount, remaining months, so how many months the debt is, the term of the debt is, when it starts, when you start repaying, and the interest. And then the model will take care of the rest. So this concludes the inputs tab. And then anything else is basically calculations or dashboards. So as you can see here, we have dashboards number. You can open, for example, total available seats. You can see how they evolve over time. So in 2024, overall, considering like the cumulative sum for all days and months that you are open, you have 9,625 seats available. Then you can see how much you have taken, the occupancy, the resulting occupancy rate. You can see revenues, overall revenues per type, so eating side or delivery apps, the COGS, how they evolve over time, expenses, and so on. Then the charts, so this is basically the same, but with charts. So charting allows you to have a quick overview of how your restaurant is doing, the capex, expenses, how they evolve over time, headcount, how the cash is doing over time. You can see if you in any moments of your model cash goes below zero, then you say, okay, then I need more debt, or I need an investor that gives me more money at the beginning, or something like this. And then if you want both, you can have it here. So here you have both, so chart and table. And if you want a breakdown month by month, you can click the plus here, and the breakdown will appear at the right. And now you can see, month by month, how, for example, the total available seats evolve. Then, and in this case, they start in April because we set in input that the restaurant opens in April. Okay. Then we have financial statements. Here, the financial statements, as mentioned, you have the profit and loss, balance sheet, cash flow statement, and then corporate taxes. So you can see the breakdown by revenues from eating side and delivery app, overall revenues, total COGS, resulting gross profit, and then EBITDA, earning before interest, taxation, depreciation, and amortization, EBIT, earning before taxes and net income, balance sheet, total asset, total liabilities plus equity, and then cash flow statement with the operating, investing, and financing cash flow, and the overall cash increase or decrease. And then all the other tabs are just calculations. So you can see in the calculations tab, that they are calculated, complex calculations to calculate all the financials of your model based on the inputs that you've inserted into the input tab and how they evolve over time. You can see a breakdown month by month for several categories: occupancy rate, seats taken, average sell price, seat inside, and so on. Same for expenses, either one time or recurring. Full-time employees, salary by department, employees, number of employees at the end of the year, and so on. And then capex, again, residual value, depreciation schedule. This is the 10 years or 20 years that we discussed earlier. And then overall capex and when it happens, right? So in this case, always in January, because that's what we inserted in the model. And then we have the debt. So in this case, we had inserted 2 loans, one in January 2024 and one in January 2025 of 55,000. So it shows you the remaining debt for each one, and then cumulatively for both, and how much you are repaying for capital, for interest, and then the outstanding, basically, the outstanding debt. And then the final tab is valuation, where given a set of assumptions like revenues growth rate for the extrapolation period, the EBIT margin for the extrapolation period, the average cost of debt, the cost of equity, and so on, resulting with the average cost of capital, you can get an estimate of the value of the implied value of your company today based on the forecast, the 60 months forecast that we gave, plus the extrapolation period, and then the implied multiples based on the valuation.